it's rough. Groceries, the cost of groceries has gone up, the cost of gas has gone up. And as this is all happening in the context of 2 years of a pandemic, it's one of the highest priorities actually for the president and for me. And so we're dealing with this issue in a number of ways. Short term, one of the issues is the supply chain. We're seeing a bottleneck and we need to relieve that bottleneck. Long term, we need to bring down the cost of living. And that's a long-standing issue.
The Vice President of the United States, Kamala Harris, there speaking to ABC. From New York City this morning, good morning. Lisa Abramowitz, Matt Miller, Jonathan Ferro, Tom Keene back on Monday. Your equity market down 12 on the S&P, negative 0.25%. Lockdowns in Europe, in Austria. They now have a vaccine mandate, a compulsory vaccine mandate that comes into effect early next year. Germany could be moving in the same direction with lockdowns. That means a weaker euro, euro-dollar, a break of 113 at 112.95. We're down 0.7%. A bid into the German bond market, a bid into treasuries. Yields come in 5 basis points to 153.77. That's some depressing stuff. Here's some happy stuff. As the audience knows, the Christmas tree is up in Casa Ferro. The Christmas music will be playing this weekend and into next week when I take the week off.
No way.
This from NBC on Christmas music. This is amazing. All I Want for Christmas from Mariah Carey. Do you know how much she makes every single year from streams alone?
No.
Last year and the year before, $1.9 million and $1.7 million.
How's your
from
singing
their
voice?
Calculations. I'm not going to sing it, but streaming alone from that one song, Matt, that is unreal.
Here, I'm not exaggerating. I guarantee Mariah Carey spends that much money in a month.
And maybe that's true. Matt, do you know what I just remembered? Matt and I once went on a road trip to upstate New York. Do you remember this, Matt?
Was I playing live in Japan?
We played Mariah Carey live in Japan on repeat for about 3 hours.
It's a great concert. Absolutely love it.
And we both sang along to it.
Matt, you surprised me.
She's
and you sang along too?
Golden
in a
tonsils.
Ford F-150 pickup, an F-150 Raptor,
all right,
with blacked out windows pumping Mariah Carey.
I can't even.
And I think maybe some shotguns in the back. Anne-Marie joins us now. Anne-Marie Hordern, Bloomberg Washington correspondent. Anne-Marie, let's talk about your reporting down in D.C. on the next Fed chair. It seems like Senator Manchin is doing the interviews.
It does, and he's lining up the next one, Jonathan. His team is seeking a meeting, according to a person familiar with his thinking, to sit down with Governor Brainard. We know he already had a call with Chair Powell. He's also seeking another meeting with Chair Powell. And this is as it's getting very close to a deadline that's been quite shifting for the White House. Now they say we'll find out about the Fed chair before Thanksgiving. It does seem like there is still some indecisiveness. And this morning we have a release and a statement from 2 Senate Democrats who are saying that they do not want a reappointment of Fed Chair Powell. And a lot of this has to do with climate change. And they think, they didn't specifically say this, but they think another candidate would better embrace climate change when thinking about monetary policy.
Anne-Marie, I was reading an Isaac Boltanski note of BTIG this morning, and he said that it does seem like perhaps Governor Brainard is getting a bit more support in the chatter, although it does seem like the opposition to Chair Powell is somewhat disjointed. This is his words. Is that your view of it as well, that Lael Brainard looks like a much better candidate to, with respect to getting passed and with respect to support than perhaps a week ago?
It's perhaps, yes, more than a week ago, because you're seeing some of these statements come out. But I would say there's different ways of gaming out how you're going to get either of these candidates over the line. If they're individuals in the Democratic Party who are against Chair Powell, he's going to pick up those votes on the Republican side, right? He has wide support from the Republican side. But when it comes to elevating potentially Brainard, she really was going to have that push from the progressives. I still maintain and go back to Bloomberg News' reporting from the summer that it would be risky, essentially, for the president to go against his key advisor, which is former Fed chair, current Treasury Secretary Janet Yellen.
Although, Anne-Marie, she has backed away a bit from those statements that she made off the record, at least, in reporting by Bloomberg, and on the record has been pretty non-committal. I do wonder, though, if climate change and issues like that will really be what dictates who becomes the Fed chair rather than inflation, which is front and center for all politicians right now.
Yes, front and center, and it is one of the biggest problems that the White House is dealing with. You could see in terms of what they're trying to do with even moving money to try to help individuals this summer, this winter, in terms of their heating bills. But quickly on climate, I would say, although you are hearing from progressives that they don't like what Chair Powell has done, Chair Powell has brought the Fed into a global central bank climate network. About 85 central banks around the world are part of this. He's also talked about the fact that, yes, climate change could potentially impact the economy. If it was to do so, that is something that we would have to consider. But as of today, climate change is not something that we encounter with monetary policy. So he hasn't completely dissed climate change as something the Fed would never take up, just not something that is impacting monetary policy as of the Fed's decision in the present moment.
To me, it seems like Jerome Powell is mad woke. Am I off on that, Anne-Marie? Is he not? Do we not consider him, and I'm not using that term pejoratively, he considers issues that other Fed chairs haven't, including diversity and inclusion.
Diversity and inclusion, he spoke about during the pandemic, hardships of individuals, even personally, how he saw more tens and homeless people on his drive into Washington, D.C. to come to his job. He also has, alongside with Governor Brainard, really pushed that dual mandate of the Fed. We want broad and inclusive employment. I'm not going to say he's woke, but he's
that was an eye roll worthy of a millennial. I like that.
Come on, you asked for that one, Matt.
He's certainly taking on issues that you would potentially see from a chair that's led by someone who associates themselves with Democrats. Also similar to inflation. Everyone says Brainard is going to be very dovish on inflation. The individual who's known to really clamp down on inflation was Fed Chair Volcker, and he was a Democrat.
Anne-Marie, do we know when we get this decision? Have you worked out what's been holding things up? This is like a mystery to me. Why are we dragging our feet so much over this?
So there's a great piece in Politico this morning from Jonathan Lemire, who talks about how President Biden thinks about decisions. If he's, quote, stubborn, as they talk about in this piece, when it came to Afghanistan, he was very much set for years on what he wanted to do and how he was against this. In other decisions, and we saw this with the hard infrastructure agreement, he went to Capitol Hill twice and still didn't tell his party, I need you to vote on this. I need you to vote on it soon. He has 36 years as a senator. This is about coming to consensus, getting into the minutia, getting into the details. And that is potentially why, as Jonathan Lemire argues, he was not able to pull the trigger in some instances like what you're seeing today. What ends up happening in this very DC world is that then the sausage making becomes the story. And that takes away potentially on what they might do in terms of their end final decision. I also like to just quickly note, I've also taken a road trip with Matt on the back of his motorcycle.
Ah, true.
Really?
There we go.
Ducati Multistrada.
Lisa is the odd one out right now.
Did you listen to Mariah Carey?
I'm wondering how she escaped this.
There was no Mariah Carey. I was holding on for dear life. If you have, Lisa, just word of advice, since Matt's looking at houses, he'll be bringing his motorcycles over. Just make sure you wear all the protective gear when he gives you a ride.
Good to know.
Anne-Marie, thank you. AMA's great reporting down in DC. Matt, I thought you couldn't bring the bikes over.
I can't bring the ones I bought in Europe over, but the ones I brought with me from the U.S. I can bring back.
The ones.
Okay. There are many.
Multiples.
There are many. From New York City, this is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
There's just a little bit of risk aversion this morning to start the week, end the week. Good morning to you all. I need to end the week and get you to the weekend. Futures down 0.2 on the S&P 500, positive on the Nasdaq by 4. We are negative on the Russell. On the small caps, we're down by more than 1%. Just as people were starting to reach for those Q1 21 playbooks again for next year, early next year, we take a bit of a punch by what's happening in Europe, and this is how it's playing out in the bond market. Bid into German bonds, bid into treasuries. Switch up the board and get to treasuries. 2s, 10s, and 30s on 10s right now. 153.77, yields in about 5 basis points. Lockdowns back on the table in Europe. In Austria, that's the story. In Germany, it might be the story further down the road. In the US, I've got no idea. Let's hope not. 10-year treasuries at 153.77. The 2-year making a move as well. Lisa, the 2-year comes in about 4 basis points to, let's call it 46 on 2s. And we've been talking about that spread. We'll catch up with TD in just a moment on their call for December 23. Never mind the Q1 stuff next year. Never mind the second half stuff next year. He thinks they're going to wait. Jim O'Sullivan at TD. He thinks they're going to wait until December 2023 to make a move and hike interest rates.
A lot of analysts think that Fed officials want to wait. Will they get the ammunition that they're looking for if there is another wave? And we're certainly seeing oil prices come down at least a little bit more today on the heels of what we're seeing over in Europe.
There's a view in the FX market, the ECB can't go anywhere. The Federal Reserve will do something. Push that through the FX market. Euro dollar weaker to 112.89, down 0.7%. Matt Miller, we've talked about it. We've teed it up. The middle of December, 1 month away. That lineup of central bank decisions, the 15th and the 16th, is going to be absolutely phenomenal.
Yeah, it's going to be amazing to watch. And, well, at least it'll be fascinating to watch. I don't know if amazing is the right word to describe watching an ECB meeting, but the E in PEP is going to be key. You pointed this out. You know, as we see coronavirus infections start to explode in the core of Europe, in the biggest economy in Europe, in the engine of Europe's economy in Germany, the question is Christine Lagarde going to have to rethink tapering of that bond buying program?
Can I just get it on the record? Do you not enjoy those ECB presses? Does that not do it for you?
No. I've gone to
breaking news.
I've gone to way too many, and ever since the woman poured like pink powder all over Mario Draghi.
I remember.
They've increased security to the point where it's just not fun.
Wasn't it confetti?
Confetti, maybe.
Is that the highlight for him of ECB meetings?
No idea, Lisa. 112.89 on euro dollar, negative 0.7%. That's the cross asset price action. Some euro weakness out there. Let's get you some movers and say good morning to Romain. Morning, Romain.
Hey, good morning, guys. Whatever the ECB decides or the other central banks decide with regards to this uptick in COVID cases, investors have already decided here. Delta Airlines setting up for a fourth straight day of declines, down only about 1%. But we've seen weakness all week long in a lot of the travel stocks, at least here in the United States. While, of course, a lot of the lockdown chatter right now is still over in Europe, there's some concern that it could feed through here into the U.S. market. Some of the sort of stay-at-home trades like Zoom, Peloton, Cloudflare, Netflix, all higher here in the pre-market as a lot of people bet that maybe as we head deeper into the winter season here, we could be hunkering down maybe in a way that we didn't necessarily anticipate. Right now, Zoom shares up about 2% on the day. And we got Applied Material earnings last night. Interesting commentary out of the CEO, Chris Dickerson, talking about a lot of the supply chain issues. More importantly, he actually quantified the impact of it, said it actually held back sales by about $300 million. If you do back of the envelope math, that's about a 5% hit to revenue. He said that's going to persist deeper into 2022. But then flip up the board here. We heard from the CEO of Micron over at the Bloomberg New Economy Forum. He actually said that he's actually seen this start to ease, some of the supply chain issues start to ease. And he says the light is really at the end of the tunnel, at least in the market for some of the memory chips that Micron specializes in. Those shares higher by about 2%. Quick, let's keep an eye on the retail space. Foot Locker shares down here after reporting earnings this morning. Comp sales were the big disappointment, though we did actually see margin expansion, something that we're starting to hear from a lot of the retailers out there. But far-fetched, and this is something we had the CEO of the International Council. Though we did actually see margin expansion, something that we're starting to hear from a lot of the retailers out there, but far-fetched, and this is something we had the CEO of the International Council of Shopping Centers. He actually said that there's a lot more foot traffic now in the brick and mortar stores, and that's coming at the expense of some of the pure play e-commerce companies. Far-fetched, one of them, they came out with earnings, and those earnings seem to suggest that that trend might actually be the case. Their guidance now for the full year coming in 3 full percentage points below the low end of their previous estimates. Those shares down about 22% here in the pre-market, John.
Romain, thank you. As always, looking forward to the close a little bit later on Bloomberg Television. Romain picking up on the airline story there. Matt Miller, Ryanair is down for 10 straight sessions. The European airlines have been sniffing this one out for a while.
Yeah, unbelievable. Of course, the biggest costs for them are fuel, which had been on a tear, and labor, which is really hard to come by, especially at a low price. But this COVID increase that we've seen in Germany and Austria and the core of Europe, really not good for travel on Ryanair. And of course, Ryanair and EasyJet, for those who aren't in Europe and don't know, two of the most popular ways to travel around the EU.
Ryanair down 12.5%. over the last 10 days. Joining us now is Jim O'Sullivan, Chief US Market Strategist, Macro Strategist at TD Securities. Jim, arguably with the biggest call that we've been talking about over the last week, we caught up with your colleague Priya Misra about it, waiting until December 2023 to hike interest rates. You're at the very far end of the range of the people we talk to right now, Jim. Why can they wait that long?
Hi, Jonathan. Good morning. Well, I mean, obviously, it's hard to be very specific on exact timing, but our point broadly is that momentum will be down over the next year. Now, obviously, if you simply extrapolate where we are now, growth looks very strong, unemployment is falling, inflation is way, way too strong. And if you simply extrapolate, then, of course, the Fed would have to tighten. But, I mean, the key issue is what momentum is going to look like over the next year. And we do think, despite the budget bill being worked on in Congress and will probably ultimately be enacted, that there will be significant fiscal drag in 2022. So the budget deficit will go from basically around 12% of GDP in fiscal 2021 to around 5% in fiscal 2022. Now, there are some offsets, but we think the net of this is going to be pretty significant downward momentum. So I think it'll feel quite different as we get toward the middle of next year in terms of momentum and growth as well as inflation. And so we'll see where we stand at that point. And obviously the Fed has bought themselves some time with tapering. I mean, they've got a 7-month tapering, so that won't wind down until June. I mean, we would say the bar for accelerating that is extremely high. So we'll see where we stand, obviously, as we get toward the middle of next year, but we think momentum's going to be down between now and then.
This is really interesting to me that a lot of people have come on and they've said it doesn't really matter how much inflation does come down next year. If it starts coming down, it will edify the Fed's position. Do you think that that's true, or does it need to drop a certain amount and by a certain date for it to actually support where the Fed's approach is actually right now?
I think, I mean, meaningful slowing. I mean, the year-over-year numbers are still going to be quite strong, of course, because you're not going to drop out all these high numbers for a while until the recent strong month-over-month numbers drop out. Then the 12-month change numbers are elevated. But we'll see what momentum is like on a monthly basis. I mean, do you have to get to 2% year-over-year? Absolutely not to hold off and tightening. But that brings in the other part of the mandate. If you get enough slowing on inflation, the focus turns back, I think, to where they stand on the mandate on employment. And there is a lot of debate right now about what is maximum employment. Obviously, the wage number is pretty strong. The participation rate numbers have been disappointing, but yet payrolls are down 4 million plus from pre-COVID levels. So, I mean, this is going to be an important debate over the next year. What is maximum employment?
Yeah, I was going to ask you about that too, Jim. I mean, maybe there have been such structural changes that this is just the new normal. You know, if you can't get employees through the door, even if you're raising wages, and there are so many jobs out there that anyone could get one, how are we not at maximum employment already?
Yeah, well, I mean, if you simply extrapolate current numbers, including JOLTS numbers, job openings, where the participation rate is, et cetera, what the wage numbers are doing, then you'd say on the surface, sure, it looks like maximum employment. But everything is so distorted right now by COVID. I mean, we had the Delta wave over the last several months, which clearly contributed to preventing participation rate from starting to improve again, despite the expiration of unemployment benefits, et cetera. So, I mean, it's too soon to really just take these numbers literally, given that we're still in the midst of the pandemic. And so we'll see where we are in a year's time. I mean, I think most Fed officials would say they would not be satisfied that this is the new normal in terms of the level of employment and maximum employment. I think they want to get these people back. It might take time and there will be lags, but they do expect most of these people to come back. Not all of them, and certainly there are.
I thought most of them were retired. I thought most of them just have done so well in the market that they stepped out and bid adieu.
Well, I mean, the nature of those data is that, I mean, people retire and then they unretire. I mean, so people do go back and forth in those numbers. And a lot of what we've seen is people not coming back into the labor force having retired previously. So again, I think it's too soon to just simply assume that the participation rate is going to stay where it is. And I think we would expect to see recovery over the next year. It's not all going to happen in 1 month. And certainly most Fed officials, I mean, obviously, particularly if it's Brainard as the chair, we would say, but even with Powell as well, would be hopeful and would expect that most of these people can come back with time.
Jim, just quickly, Lisa's been on top of this one through most of this morning. Just how much daylight is there between Chairman Powell and Governor Brainard? You've been waiting for the same decision we've been waiting for. You're a Fed watcher yourself. How much daylight is there between the two?
I mean, on monetary policy, obviously there's talk about regulatory policy as being a bit more clearly different. But on monetary policy, not necessarily huge, but yes, I mean, I would say most people would say that Brainard is likely to be more dovish. She's more likely to have a dovish interpretation of maximum employment, we would say. But again, I mean, Powell is pretty dovish as well.
Jim O'Sullivan, a TD. Jim, you're confusing us all. Thank you, sir. As always, Governor Brainard's dovish, Chairman Powell is dovish, and this is why, Lisa, you've been making this point. Just how much daylight is there between the both of them?
I mean, what's actually going to be the difference in monetary policy? And a lot of people say, kind of unclear, if anything, at all. They both are taking a pretty lax approach to how quickly they have to tighten. There have been some people who have said that Governor Brainard will take a more aggressive approach with respect to employment, that will be her main objective rather than inflation as well.
Confirmability. There might be a big difference between the two at the moment, Lisa, down in Washington, D.C.
Yeah, although you are getting more pushback to Powell, as you mentioned earlier, and a little bit more acceptance of Brainard. So at what point, you know, who's got the bigger problem on their hands at this point?
I actually don't know. I mean, you get the Republicans to come over. They vote for Chairman Powell, wouldn't they?
Yeah, I think Chair Powell widely is thought of as more confirmable.
Nadia Lovell's going to join us very shortly from UBS. UBS have got a big call for the S&P 500 next year. We'll get through that in your equity market this morning. Getting through this morning into the weekend, we're down 0.25% on the S&P. The small caps are a struggle off the back of what's happening in Europe. That's why you've got a rally in the Treasury market, down 6 basis points on 10s to 152.74. From New York, this is Bloomberg.
With the First Word News, I'm Laura Wright. On Capitol Hill, House Republican leader Kevin McCarthy called President Biden's economic agenda the most reckless and irresponsible spending in the history of the U.S. McCarthy's lengthy speech on the floor prevented Democrats from passing the $1.6 trillion legislation last night. They are set to approve the legislation today. Mexico's President Andrés Manuel López Obrador told President Biden to reduce imports and loosen immigration restrictions in order to ease labor shortages. The Mexican leader and Canada's Prime Minister Justin Trudeau met at the White House in the first North American summit since before the Trump era. Trudeau pushed on a number of issues. Among them, he objects to proposed subsidies for electric vehicles. Bitcoin has now fallen almost 20% from its record in less than 2 weeks. The largest cryptocurrency is hovering around $57,000. Some analysts say a sharp pullback is normal after prices soared 40% in October. There's also been a crypto crackdown in China and a new U.S. tax reporting procedures that have hurt sentiment. Bloomberg has learned that Toyota will spend billions of dollars on a battery plant to be built in North Carolina. It's part of the Japanese automaker's plan to ramp up output of electrified vehicles in the U.S. Toyota has not made a final decision, but is expected to join forces with Panasonic. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What
that
did
I
he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
How does an extra $1 trillion in spending not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal. But Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of health care, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the Q3 was the quarter that was most affected.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
We do not take this phase of higher inflation lightly. We are committed to ensuring that inflation stabilizes at our 2% target in the medium term. Today, inflation is largely being pushed up by the exceptional circumstances created by the pandemic.
There are some problems in Europe. That was Christine Lagarde, the president of the European Central Bank, from New York City this morning. Good morning. Lisa Abramowitz, Jonathan Ferro, together with Matt Miller. Tom Keene back with us on Monday. This is what the trouble in Europe looks like. Euro dollar down to 112.84, negative 0.8%. A bid into the bond market. German bond yields are lower off the back of new restrictions. In Austria, back in lockdown. In Germany, they could be following. Yields are lower on treasuries too by 6 or 7 basis points to 151.89. And that's a firmer curve through the whole of the curve. Twos out to 30s. Lisa, your 2-year yield in 6 basis points to about 44, 45 basis points this morning.
And how much is this that basically the Fed will be able to remain on hold for longer because of what's happening in Europe, because of what's happening in oil prices, because perhaps there's going to be some sort of additional wave in the United States? Hard to kind of parse through the logic.
That's the early knee-jerk move in the early part of the session stateside. Equity futures, I talked about the S&P, were negative 1/3. On the Russell, the small caps are down 1.4% this morning. Let's get over to our stocks editor, Dave Wilson, for a little bit more on the performance, not just this morning, Dave, but on the year.
Yeah, absolutely, John. You know, it took a run through the 11 main industry groups in the S&P 500. You know, and something that jumped out at me is looking at the contrast we're seeing between real estate and utilities. I mean, these are two groups that you tend to think move together because they're interest rate sensitive. And a lot of times that's true. It's certainly been true the last few years. This year, a very different story. You look at the S&P 500 real estate index, it's up something like 38% this year. Third best performer. Utilities only higher by about 6%. And they're the worst performers out of those 11 main groups. And so you are looking at the biggest gap between the two since 2010. And this at a time when certainly interest rates are front and center for a whole lot of investors here.
Dave, before you run, have you seen these moves in these airlines? Not just in the States. Remain went through that for us, but in Europe it's brutal and has been for the last 10 days.
Well, I mean, there's so much concern about how, the latest wave of the coronavirus is playing out. Are you going to see, the easing of travel restrictions kind of move in the other direction? So you can understand why investors are so focused on, what's happening when it comes to the virus and people's willingness to travel, especially as you get toward that holiday season, which is one of the biggest periods of the year for the airline industry.
Our stocks editor, Dave Wilson, there on some of those names. IAG, let's get back to that board again. IAG down hard in today's session. A parent company, British Airways, off by 4.8%. Matt, we talked about this 10-day move. For IAG, they're down almost 20% over the last 10 years. It has been rough, ugly, ugly, ugly.
Yeah, I'm just throwing IAG into a comp screen. I love to use the comp function on the Bloomberg because it gives you a 5-year look and you can compare stocks all with the same measuring stick. Over the last 5 years, Ryanair has given you an annual return of just about 2%, total return of 10% in a 5-year period. IAG has given you an annual loss of 10% over a 5-year period. For comparison, Lufthansa is giving you an annual loss of 7%. So IAG has been a serious loser, British Airways and Iberia.
Those names losing again this morning. Matt, thanks. Let's bring in Maria Tadeo and head over to Brussels to get the latest out of Europe. Maria, just fill us in. Germany, Austria, what's happening?
Well, we have two things today that really change the narrative in Europe, John. And one, of course, is that we're seeing a lockdown again in Austria. Remember, we were told we were not going to see any lockdowns in Europe again, that the vaccination would prevent that. Now we're going into one for 20 days. The other thing is Austria also saying once we finish with lockdown, we're going to make the vaccination compulsory for everyone. This is no longer a choice. This is much more drastic than anything we've seen in Europe until now, and it's much more drastic than what we expected to get from the Austrian government. What is interesting here, however, is that it could really set a precedent for Germany. We know that infections are jumping. We also know that hospital admissions are jumping. Today, the German health minister said something that, again, changes the narrative in Europe. He said we can no longer exclude a lockdown, and the vaccine, the booster, that may not be enough. We need a real break for this, and that may mean more restrictions to come.
Maria, Matt Miller earlier was describing Austria as a mountainous regime where people don't see their neighbor. Aside from that particular description, what is the implementation process going to be for Austria to get compliance with this compulsory vaccination mandate?
Well, look, this is very difficult to do and it's very difficult to measure. But what we've seen right now, and remember there's a lockdown already for unvaccinated people, is that you do put policemen and women to track people, to ask for their documents, is to ask to see for this health pass. You could also argue that they will put into place a system online in which you will have to prove that you've been vaccinated, and the government will probably get on the phone and call people who are not registered as vaccinated, telling them that starting February 2022, they will have to get vaccinated. Otherwise, there will be fines to come in.
I want to point out that I'm a huge fan of Austria. Love Vienna, where there are no mountains. I bought a car that was built in Graz. I like to ski in Stanton. But when we get back to the real economy that matters for the European growth picture, Maria, it is Germany. They're just bringing in a new regime. What can Olaf Scholz and his friends in the Greens and the FDP really do about this?
Well, and he's the one that's going to have to clean up this mess. Remember, Matt, and you were in Berlin very recently, Angela Merkel was told that she was very lax, very lenient with prevention measures because she didn't want to spoil the election. Nobody wanted to kill off the good vibe in the summer, and now this is what we're getting for. That's the ramifications, the repercussion of it. But the one thing that's different from Olaf Scholz to Angela Merkel is that he said already, he's not even the chancellor, but he said this already, that he will have to take measures that we've not seen yet in Germany. Whether he's alluding to a mandate for vaccination remains to be seen, but he's signaling he will be tough on some of these measures.
Maria, good to see you, as always. Looking very impressed with Matt Miller. Maria Tadeo, out of Brussels. Matt, 2 hours into a show, if you have to apologise to a whole country, something's not gone right. You understand that, right?
I'm not. Listen, the point is it's going to be difficult to enforce this across the entire nation because people are very private in certain pockets of Austria. But
I thought you said they don't see each other.
Sometimes you could go a long time without seeing your neighbors if you live in a mountainous region. Can I back out of this somehow?
Sure, we can get the camera off you. Take the camera off, Matt. Just leave it on me and Lisa, and we can work through this together. Matt, it's okay. Take a break. Lisa, clearly this is playing out through this market in a big way.
I love how Matt Miller was saying, basically, some of my best friends are from Austria. But yes, it is definitely playing out in markets as people rethink how quickly we can come out of this. I think of the air travel sector in Europe. They were just coming out of this slump. And the idea here, how does the U.S. handle this? We had restrictions on European people coming to visit. Do we re-implement some of that?
This is why I always enjoyed anchoring on radio and not so much on TV sometimes. The awkwardness of being left on that shot, just waiting and waiting for it to go away, and not just feeling like you've got to have something to say.
I think we should do that.
So we just leave it on your map?
Yeah, I think that
a second feels like good. A second feels like a lifetime.
I'm not downplaying the importance of Austria. They have almost 9 million people living there, so almost as many as New York.
You're going to be with us in the next hour, Matt?
Maybe.
I hope so. Matt Miller, Lisa Abramovich, Jonathan Ferro, Tom Keene back with us on Monday. Your equity market down 14 on the S&P. We're negative 0.33%. Treasuries are rallying. Yields are lower by 6 basis points at 152.57. The View from UBS up next. This is Bloomberg.
There's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp.
All right, perfect.
In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's difficult to see how at current levels multiples expand further.
I think with some of the high valuations, they actually may be worth it in some cases.
I think markets are very well supported. I think we're going to come pretty close to double digits.
Corporations, their fundamentals cannot be better, and inflation is really not disrupting that.
You're looking at a very strong trajectory for growth over the next several years.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
A little bit of risk aversion to end the week from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Together this morning with Matt Miller, Tom Keene back on Monday. Your equity market down a third on the S&P. Lisa, it's the small caps taking it on the chin.
Yeah, although the fact that you said a little bit of risk aversion really highlights the mood that we're having right now. Yes, you're having potential lockdowns in other places beyond just Austria, in Europe, and yet we're not seeing a material move lower in the broad majority of stocks, or even if you are, it's not that significant. I think that tells you where we are.
If you're just tuning in, lucky to have our resident expert on Austria joining the program with us this morning.
You're going to keep going
Euro
with
dollar
this.
Matt Miller, 112.60. We are near session lows now, down 1% off the back of these tighter restrictions in some European economies.
If you think about what's happening in Austria, it's actually pretty unbelievable. They are going to mandate a vaccine for the entire country, something that's unthinkable in the U.S. and that I don't think the Germans could do either. So it's politically not viable in most Western countries, and I don't think it'll be possible in Austria either.
Where's your attention right now, Matt, away from Europe? Is it the single name level, the index level, the FX market, the rally in the bond market?
It's really
off the back of this bond market story, off the back of Europe.
It's really, so for me, immediately this morning, it was the FX market, because I noticed a big spike around 420 this morning on the Bloomberg Dollar Index. And then I quickly looked at the yen, because we've been seeing some real dollar strength against the Japanese yen over the past couple of sessions. I was watching for 115, and the yen was even stronger than the dollar this morning, even as the euro and the pound weakened against the greenback. So that just tells me that there's risk aversion going on a little bit, because people are going to the dollar, but a lot as they go into the yen.
A 1% move on euro dollar. Lisa, we haven't been down here since July 2020.
Yeah, and if you take a look at the Swiss franc, we were looking at that yesterday. That's another place of incredible risk aversion that people are piling into. The euro is now the lowest versus the Swiss franc going back to 2015. You do wonder how much this isolates them and how much leverage it gives the ECB to keep going with some of its bond buying.
Let's whip through the price action worldwide and start with the United States and your equity market on the S&P 500. Some weakness out there, down 14, negative a third of 1% at the single name level away from the index. Look out below for the airlines on both sides of the Atlantic. IAG, British Airways. IAG's taken it on the chin big time this morning. Not just the small caps in America, the airlines on both sides of the Atlantic struggling this morning. Yields in 6 basis points on 10s to 152.57. And we get a helping hand for anyone concerned about crude prices. Lisa, 76.35 on WTI now, down by more than 3%.
Yeah, how much can President Biden potentially avoid that release of the Special Petroleum Fund because of what's going on with his job holding, with China, and now with the COVID wave?
Ton of Fed speak coming up too. Vice Chair Clarida, Governor Waller. Vice Chair Clarida. Lisa, we have hardly talked about Vice Chair Clarida. His name is not even in the mix going into next year.
When he's been speaking, first of all, right, he's not necessarily going to be part of the leadership in any way, shape, or form. It's unclear what his position is going to be. But when he's spoken, he has towed the line. Will he change today? Especially as you hear a growing consensus, even from John Williams yesterday, about the rising threat of inflation.
Waiting for the next Fed chair. Maybe it's Chairman Powell another term. Matt, it's amazing to me that Vice Chair Clarida hasn't been talked about, because for many market participants, and I've mentioned this a few times over the last few weeks, he's been a guiding light. When Chairman Powell struggled with the communication, you were looking through the list of Fed speakers waiting to hear from one man, and that was Vice Chair Rich Clarida.
Yeah, I've always looked forward to hearing what he has to say, because I don't think it's as easy to put him in a camp as a dove or a hawk. When I see a headline saying that Neil Kashkari thinks that we need more stimulus, it doesn't surprise me. When I see a headline saying that Jim Bullard thinks rates need to rise, that doesn't surprise me. But Clarida is one that you can't always put in a drawer. That's a German saying, directly translated to English.
It works, Matt. It works.
Does it work? Okay. So I think it's more valuable to hear from him.
You can guess what Kashkari is going to say before he says it, Matt. You can guess what Bullard's going to say before he says it. And you're waiting for that inflection, that pivot from people like Vice Chair Clarida. And right now, Lisa, even if he made that pivot on a day like today, I don't think many people think he would. But even if he did, how much weight would that actually carry?
Honestly, here's the thing, though, and let's be honest. Fed Chair Powell, if he is replaced, he has to be replaced with someone who is not also a man on the board, right? I mean, they do want diversity. So if he's going to be switched out, that's going to be a major component of this as well.
Joining us now on this equity market is Nadia Lovell, Senior Equity Strategist at UBS Global Wealth Management. Nadia, I've been teeing this interview up over the last hour or so. You and the team out with your outlook. 5,000 next year, but not year end, in June of next year, and then only an extra 100 points from there over the next 6 months. Can you walk me through the trajectory of the next 12 months that you're looking to play out?
Absolutely. You know, we believe that 2022 will really be a year of discovery for both markets and individuals. As we know, the last 2 years have been somewhat unusual, but next year we think that financial markets will discover what normal looks like from a growth and an inflation standpoint. We really think it will be a year of two halves, so that's why you see the spread between our price targets for mid-year and year-end. The first half being elevated economic growth, so we're looking for growth in the range of 4 to 5% and high inflation. But as the year really progresses and things normalize, we're looking for the second half to be lower growth, still healthy and above trend, and more subdued inflation. So we think in that environment, the S&P can reach 5,000 by the time we get to June of next year.
Nadia, are you looking right now at what's going on in Europe as a blip or a potential risk scenario that could move over to the U.S. should this pandemic start to pick up again?
Absolutely. We always watch the COVID cases very closely. Yes, the rise in cases overseas is concerning, and that could translate into the U.S. We've seen this pattern played out before. That's why we don't think that we're out of the woods, and that's why we continue to believe that the Fed will be patient. There are areas of the economy that has recovered from COVID, but there's still areas that are still on the mend, particularly on the service side. And so we don't think that the Fed will be overly aggressive, particularly as COVID cases haven't fully resolved yet.
How important is an inflation call for you, Nadia? We had a Bloomberg Business Week cover story on this by Katie Greifeld pointing out that if you make the wrong call here, as a strategist, it's very bad. If you make the right call, you are potentially a hero for decades.
Absolutely. You know, the inflation numbers is something we're watching closely, but we do think that inflation will become more subdued in next year. As we know, much of the spike in inflation is being driven by the more flexible component of an inflation basket. So things that reprice more quickly, food, energy, auto, hotels. If you look at the core flexible CPI, it's up nearly 15%. But while inflation is broadening out to some of the more sticky areas, we do think that the more flexible elements will normalize in 2022. And so we're looking for inflation to get slightly under 2% by the time we get to end of December 2022.
There's one thing missing from this call, Nadia, that I wonder if clients have picked up on as well. No rate hikes until 23, inflation to subside down towards 1.8% by the end of next year. Got all that. Very bullish at the index level, 5K by the middle of next year. I look through the preferred sectors, energy, financials, discretionary healthcare. There's one thing that's missing. When you talk me through that macro backdrop, inflation, the Fed, patient, where's investment? Where's the IT story? Where's the information technology story in your equity market call?
Yes, we're neutral on tech at the moment. But again, with COVID cases rises, we know we do typically see volatility in those more reinflation trades as well as reopening trade. And so there is room for tech in the portfolio over the long term. And so on pullbacks on tech, meaningful pullbacks on tech, we always advise clients to add to longer term position. But headed into 2022, we just think that there's better growth opportunities in the more cyclical areas of the market. And so that's why we have a position that way. But if we do see a sustainable rise in the COVID cases, we do know that people take shelter in tech. So that is an opportunity.
Nadia, really thoughtful stuff as always, and good to catch up. Thanks for sharing your outlook with us. Nadia Lovell there of UBS, thank you. Looking for 5K on the S&P, not year end next year, but June next year, then 5,100 into December of 22. It's crystal ball type stuff, Lisa, but it's just about working out where we are and where we're going. And where we're going right now stateside, this from the FDA, authorizing Moderna, Lisa, for an adult booster dose of the vaccine in the United States.
Yeah, it's progress, but the bar is getting moved. And this is, I think, what's very frustrating for people with the pandemic, that initially we thought the vaccine would be the sort of panacea for this. And now we're thinking maybe not. Maybe it's a booster. Maybe it's masks. Maybe it's distancing, especially as more people don't get vaccinated. I mean, can you actually imagine a mandate here?
No, not in the same way as playing out in Austria. Not at all. I can't imagine that. Matt can't imagine that. I imagine most of our audience can't imagine that. Matt, another piece of details from the FDA decision, the booster dose to be given at least 6 months after the primary dose, in line from what we've heard about Pfizer too.
Yeah, absolutely. That puts me at December 27th. I'll be standing in line for the booster dose in Germany because they're going to allow boosters for everybody over the age of 18. They're trying to allow you to do as much as you can without mandating you to do very much of anything. That's kind of the political climate there, and I think you're seeing the same thing here. Even when we see mandates in the U.S., right, for companies of more than 100 employees, you have to get a vaccine or test every week, which is a very big out, I think, and that's the kind of size of out they're going to need.
Lisa, Moderna in the pre-market up by almost 5%.
Yeah, this is going to be the game changer. And today, the CDC is going to be potentially meeting to talk about recommending the booster for everyone over the age of 18. Can we get back to what we thought we were?
Interesting that New York's basically already there.
Yeah,
Lisa, some of these states are just getting ahead of that story from the CDC.
They want to avoid the second wave, the third wave, the fourth wave, and they're getting a little concerned about some of the numbers going up.
Joining us very shortly to talk about the numbers down in Washington, we'll hear from Greg Valliere of AGF Investments. Looking forward to that. Yields in 6 basis points on 10s to 152.90. Let's call it 153. Your equity market down about 1/3 from New York City this morning. Good morning. This is Bloomberg.
With the first word news, I'm Laura Wright. On Capitol Hill, House Democrats are expected to pass President Biden's $1.6 trillion economic agenda today. They had hoped for a vote late yesterday, but Republican leader Kevin McCarthy put that off with a lengthy speech from the floor that lasted into the early hours of this morning. Meanwhile, the nonpartisan Congressional Budget Office released its estimate that the Biden bill does not contain enough tax increases to pay for itself. 2 progressive Democratic senators say they're opposed to Jerome Powell getting a second term as chair of the Fed. Jeff Merkley and Sheldon Whitehouse say that Powell lacks a strong commitment to address the growing risks of climate change. President Biden will announce his decision before Thanksgiving. Austria will impose a nationwide lockdown next week, and Germany may take a similar move. It's all part of Europe's effort to cope with a deadly surge of the coronavirus. Austria will also require all residents to get vaccinations. That is one of the most stringent inoculation requirements in the region. Christmas came early for British stores. Retail sales in the UK rose a better than expected 0.8% in October. It was the first growth since April, when most stores opened up after the pandemic lockdown. That was the longest ever run of sales declines. Apple wants to speed up development of its electric car, and Bloomberg has learned it's refocusing the project around full self-driving capabilities. The company's new car chief is Kevin Lynch, who used to be an Apple Watch software exec. He's pushing for a self-driving car to debut as early as 2025. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Where's the common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Partial stabilization of U.S.-China relations coming out of the recent summit between Xi Jinping and President Biden is, on balance, good news for the wider region because it takes the geopolitical temperature down a notch or two. That actually creates more political space for other bilateral relationships to enter, I would hope, into a less fractious period.
That was Kevin Rudd, the president of the Asia Society Policy Institute, from the wonderful Bloomberg New Economy Forum taking place in Singapore through the week. From New York City this morning, good morning. Lisa Bramwitz, Matt Miller, Jonathan Ferro, Tom Keane back with us on Monday. Here's the price action off the back of what's happening in Europe. Europe really the epicenter for what's happening worldwide at the moment. Restrictions in Austria, more to come perhaps in Germany, more to come perhaps through the rest of the continent. It means equities are lower by a third of 1% on the S&P. Small caps are struggled down by more than 1%. A big move in euro dollar. We had a 1 percentage point move a little bit earlier this morning. In the last 30 minutes or so, we're back to about 0.9% lower. Euro dollar negative down to 112.71. Bid in the German bond market, Lisa, follow through in the Treasury market down 5 to 153, and crude back with a 76 handle.
This is significant what's going on in Europe because a lot of people thought we were at the precipice of a huge change. And you're seeing this, as you've been mentioning all morning, with the airline stocks. We thought that it would free up. People would begin to travel on the continent again. And that is getting canceled, at least in the short term.
That's where the focus is in the United States. The focus right now is on Speaker Pelosi on the House floor and talking about building back better. Greg Valliere joins us now, Chief U.S. Policy Strategist at AGF Investments. Greg, let's start right here. What we can achieve today in the House and how much longer it would take to achieve the same thing in the Senate.
Well, John, we'll get it probably today in the House, but I would issue a fake out alert. It's a fake out because even if the House passes it today, the Senate is going to take weeks and weeks to resolve all of these issues: state and local taxes, paid leave, electronic vehicles. Joe Manchin has issues with all of that stuff, but he really has an issue with inflation and thinks that spending $2 trillion is not appropriate right now.
They've scored some of this, Greg. What did you learn in the last 24 hours?
Well, I learned that the House has come together. I think that's important. But I have also learned that in the Senate, there's a lot of dissent over this bill. I'd be shocked if we got anything done, finalized in the next month or so. It's going to take longer. And I still think there's a chance the whole thing could collapse.
But do you think that the idea that the CBO score wasn't as bad as many people had expected actually gives a greater chance to something getting passed?
I get, what did they say about Wagner? His music wasn't as bad as it sounded. I mean, it's possible. It's possible that the score by the Congressional Budget Office helps a little with a handful of moderates, but it's still going to lose money. I mean, you'd have to be, totally delusional to think that this would not lose money in the next 10 years.
Meanwhile, we've been talking a lot about the nomination of the next Fed chair, just how much Washington has lost the plot when it comes to all the different sort of strains of narratives here, whether it's inflation, whether it's additional spending, or whether it's rate policies going into next year. What's your explanation for the confusion in the narrative, for the lack of decision-making on this front down in D.C.?
I wish I had a good explanation, Lisa. I think that this delay has been inexplicable. To me, it shows a lack of confidence in Powell by Joe Biden, maybe even a lack of confidence in Janet Yellen, who apparently advised Biden weeks and weeks ago to renominate Powell. It's perplexing to see this. Maybe Biden is listening too much to the left, to people like Elizabeth Warren. But if I'm Jerome Powell, I've got to be a little concerned after being left out to twist in the wind for the last 2 or 3 weeks.
Now, can I play the progressive devil's advocate for a minute, Greg? You're saying it's delusional that this is not going to cost money over the next decade, but I'm sure that the White House would argue when you make child care easier to deal with, when you make nutrition more readily available, when you make schools more accessible, you're greasing the machinery of the economy and allowing us to be more productive. Isn't that, kind of the progressive version of the Laffer curve? Maybe it'll work.
So, yes, I think that all of the individual proposals that you highlighted, especially the child tax credit, are positive. It will help the economy. I don't think President Biden has sold this very well. He's allowed the debate to really go to the Republicans who are saying this will exacerbate inflation. He hasn't hit back hard enough, in my opinion, to defend all the programs that you listed.
What about the tax side of this, Greg? Is the middle class in the tri-state area going to get some relief with a SALT deduction?
Probably something, but it may not be as much as proponents had hoped. The whole issue of taxation has been overlooked, in my opinion, as we've debated spending. On taxes, there is going to be a lot. Minimum taxes on corporations, a surcharge on the wealthy, lots of things that I think have not been fully vetted by the Ways and Means Committee Chairman Rich Neal. So taxes is going to be still another reason why this is not going to just fly through the Senate.
Greg, I'm pleased that Matt turned to the substance of this bill. I want to talk a little bit more about the substance. And you mentioned the EV credits. The extra credit you get for buying an EV assembled by union workers using American batteries. Greg, Senator Manchin's pushing back against this. I know Elon Musk is too. Greg, what is going on with this particular part of this bill?
Well, it's going to be really contentious with Justin Trudeau in Canada, and I think Mexico as well, that are seeing the U.S. have these huge subsidies for people to buy electric vehicles that could hurt the auto industries in Canada and Mexico. If this is in the final bill, I would predict the Canadians would bring charges under the U.S.-Mexico-Canada trade deal of unfair subsidies.
Greg, an interesting final point there, sir. Greg Valliere of AGF, thank you very much. Matt, what's your take on this situation at the moment? Do you think anyone needs a tax credit to go and buy an electric vehicle. Think about the people you're friends with who want one. Do you think they need one?
I think the real problem is the infrastructure, frankly, and it's not really about the tax credit. That could push you. I mean, if you get $7,000, $8,000, $9,000 to make the decision on which car to buy for an electric car, you might decide to do that. But the real problem is, are there enough charging stations? Can I actually get where I need to go without having range anxiety? And I don't think we've overcome that yet.
Well, that's part of this effort as well, isn't it, Lisa?
Yeah, that there's a big part that actually goes to building the infrastructure to spread out some of the electric vehicle network. I do wonder if it gets it far enough. I do think, though, that we're hearing an increasing number of senators, including Senator Manchin, actually seem a little more comfortable. Like, he even demonstrated that he'd be okay with a vote before the end of the year, and earlier he kind of was a little bit more wishy-washy.
Well, it depends what he's going to say when he gets that vote.
Of course,
Lisa.
But yeah, okay, that's a minor caveat.
Bring it on. I might say no, but sure. What do you want?
But at least he was not sort of saying it's premature or they're moving too quickly, which is some of the rhetoric.
I feel like it is his MO, because he allowed the $3.5 trillion framework to go through and then nuked it. So I think that's what he does. He allows them to discuss, but then won't play.
The Russell getting hit this morning. It's down more than 1%. The S&P down 0.25%. There is some trouble in Europe on the vaccine front. Austria would like to mandate it. Restrictions are back. Lockdowns could be back across the continent. Some weakness in Europe. It bleeds the United States. Equity futures down 0.25% on the S&P. From New York City, this is Bloomberg.
Years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What
that
did
I...
he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
PSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit pso.org/now, where the music plays on. PSO season sponsor, Bank of America.
This is not the quiet end to the week that you might have been looking for. From New York City this morning, good morning. Lisa Bravitz, Matt Miller, Jonathan Ferro, Tom Keene back with us on Monday. Your equity market down 11 on the S&P, off by 0.25%. The small caps with some real underperformance, down by around about 1% through most of this morning, off the back of what's happening in Europe. More restrictions in Austria going back into lockdown, imposing a compulsory order for COVID vaccinations, I think by sometime in February, early next year. Germany also struggling. They could follow. Euro dollar back to 112. Two names I want to look at, Pfizer and Moderna. Pfizer positive in the pre-market by 1.7%. Moderna up by almost 6 percentage points. Two headlines I want to bring to you. Lisa, one on Moderna. The FDA authorizing Moderna adult booster dose of the vaccine here in the United States. Pfizer-BioNTech, the booster cleared for all U.S. adults by the FDA. It's over to you, to the CDC.
Yeah, to now necessarily approve the booster shot for everyone over the age of 18, not just those who deem themselves immunocompromised. The momentum is shifting. It was really on getting a vaccine. It was controversial whether to spend your energy pushing boosters. Now there seems to be a little bit more urgency to try to get additional protection heading into the winter and possibly looking at what's happening in Europe.
That's the market story in the early part of today's session. Let's turn to the big story for us going into next week. We have been told we will get a chair decision at the Federal Reserve before Thanksgiving. Lara Raim thinks she knows who it will be. Chief U.S. economist at FS Investment. She joins us now. Lara, let's start there. You're convinced Chairman Powell gets a second term, another term. Why?
You know, inflation is clearly a huge problem right now. The administration is getting a lot of flack. It's a lot of incoming commentary and criticism about the fact that it's allowed inflation to get this bad. So if I'm in Powell's chair, I feel like renominating Powell, if I'm in Biden's chair, renominating Powell, somebody that Trump put into office, just gives me cover should inflation not resolve by the time the next election cycle runs around.
With that in mind, Lara, what is President Biden looking for from the Fed? I mean, we've been talking about whether there's any difference between Lael Brainerd and Jerome Powell when it comes to how hawkish or dovish they are. What does he want to see?
How dovish or dovish?
Yeah, thank you. I appreciate that, Matt.
He wants consistency. I think he wants a strong partner with the Treasury, something that we hadn't had during the last administration. I think at the end of the day, he really just wants to be able to focus on his agenda and for the Fed to help the economy resolve itself. So I think this is a terrible distraction. And to your point, there isn't a ton of daylight between what we think the policy outcome would be should we get Lael Brainerd as the new Fed chair. But you know, like everything else in Washington, right? They're thinking of the next election cycle, I think.
Well, let's look at the broader economic outlook, not necessarily the political one. And you were saying that you do see 6 or higher year-over-year inflation reads in the United States throughout the first quarter of next year, but that it will come back down to about 3% by the end of the year. What are the inputs that you get for this? Is it the labor market sort of getting more normal? Is it oil prices, commodity prices normalizing? How do we get to 3%?
Yeah, so, you know, I do like to build my CPI forecast bottom up, and I think energy is one that you look at. You know, energy prices have doubled over the last year. Oil prices have doubled over the last year. I don't think that recurs in the year ahead. When you look at durable goods, again, up over 13% year on year. I don't think we see a continued trajectory like that. So even if these prices stay at high levels, on the month-on-month numbers, you sort of start to see it moderating back down. I want to be clear that anybody who says that they can nail down an inflation forecast over the next year probably has too much confidence, because the uncertainty band is wide. And this is something that I am hammering to people. It doesn't take much inflation to really impact financial markets and investment returns, because it's probably going to be higher than pre-pandemic.
You know, let me ask you, you worked at the Federal Reserve Bank of New York for a while. You know how they operate. Do you think that this Fed is a lot different than the Fed we saw, the Paul Volcker Fed we saw of the 70s and 80s, in terms of not only its dovishness, but its desire to please markets?
So you hit on something really important, which is when you look at market pricing, in the bond market, it feels like we've really internalized a significant number of rate hikes next year. The equity market, one could argue, has not made that adjustment. And I think equity markets may still be carrying the memory of the last 2 rate hike cycles when they were able to really push the Fed back to neutral, away from hiking. And I think they still carry with them the idea that financial conditions may, at the end of the day, override some of what the Fed talks about with their sort of economic dual mandate. You know, we have to really remember, I think, going into this rate hike cycle, that rate hike cycles are difficult. It is a fraught path to walk, and they're highly volatile. The Fed needs to have conviction that they are working on solving the inflation problem, or else markets are just going to throw a tantrum and push them to the sidelines again.
Is transparency, I know it's super trendy to be really transparent these days, but when you were working at the Fed, it certainly wasn't their main goal. Is it really important for the Fed to be as transparent as it is?
You know, I think the Fed has so many people at the top, but at the end, it's a very consensus-driven organization. And you do kind of get the sense that for all of the talking we get from our numerous Fed presidents and board members, at the end of the day, it's kind of 3 big personalities that are really driving policy. And Powell's clearly at the top of that list.
I loved Matt's question about whether this Fed is different and how much attention they pay to the Fed and their concern about disrupting it. And I wonder, from an economic perspective, how much of a drawdown in the equity market would it take to actually make an impact on the economy?
Lisa, I don't think it's the size of the drawdown. I think it's the speed, right? I think when we look at how the economy is doing right now, we have a lot of supports from higher wage growth. We have a lot of supports from a healthy balance sheet. But when we think about, sort of the factors which are starting to impact consumer confidence, inflation is there. And I think you add a highly volatile period of equities, that could really, I think, make people even more cautious. That's the concern. So that this household confidence that has kept us going through all of this.
So then, Laura, are markets correct that basically the Fed will cave to any tantrum in markets and will subsequently ease policy? Or is this a different Fed with a different set of parameters because of the inflationary risk?
You know, it's kind of a jump ball right now because we have the new framework that's really leads you to question, what sort of inflation level at the end of the day they think is reasonable and that they're targeting. You have, I think, the recurring issue where they seem to prioritize financial conditions over some of the underlying economic conditions. I think they're going to watch housing very closely. Housing may actually be more important to them than sort of headline equities. I think when they think about raising rates, they want to restore credibility and make sure that markets believe they're going to be able to tackle the inflation problem. But, the economy is decelerating anyway. I don't think that they want to slam on the brakes so hard that they cause multiple sectors of the economy to melt down, especially things like housing, which we know are more widely held by households than equities.
I am reminded by listeners that we are simulcast at this hour, and welcome our listeners on AM 1130 and on Sirius XM 119. Laura, I was playing the progressive earlier and talking about the possibility that Build Back Better may grease the wheels of the economy and increase productivity. Maybe Biden is right when he says he's going to fight inflation with this spending rather than boost it. What's your take as an economist?
Well, that's a very long run game. And clearly we have needed infrastructure spending. That's something that both parties have tried to push through, and it is important because we need help. We need to really compete with other countries like China, who have invested huge amounts into their own infrastructure. At the end of the day, though, I think companies in the U.S., it's often companies that start these trends. And I think we've seen companies be a little bit reticent on the capital spending side so far. And I think that really ramps up next year. So we could get a productivity boost with or without the targeted infrastructure spending that comes because companies are realizing that labor is a scarce resource and it's getting more expensive and it's going to change their capital spending calculation. I think they're going to want to get in there and engage in more productivity enhancing spending.
Laura, always enjoy catching up with you. Thanks for your time this morning. Laura Raim there of FS Investments on this Federal Reserve, the next chair. And a little bit later, in about 20 minutes' time, we'll get the views of Mohammed Al-Arian of Bloomberg Opinion, columnist, and, of course, Queen's College, Cambridge president. Lisa, some forceful words from Mohammed over the last couple of weeks against the direction of travel of this Federal Reserve.
Yeah, he would agree with Bill Dudley, the idea that the Fed is vastly behind the curve and that they're going to be forced to catch up and that they're committing a huge policy error. The divergences of opinions by such respected professionals really is quite noteworthy. I have not ever seen anything like this.
Some really interesting comments from Jason Furman earlier in this week, and a couple of questions I want to bring up with Mohammed. Matt, why we are conditioned so much by the post-financial crisis era, the idea that we moved too early on interest rates and not conditioned by the pre-financial crisis conditions where we perhaps moved too late on the Federal Reserve. Why are we conditioned by the latter and the former rather and not the latter?
Yeah, well, I think it's important to recognize the difference between the Volcker and Greenspan Feds that Laura Raim worked for. She worked with the Maestro and the Fed of Ben Bernanke, Janet Yellen, and now Jerome Powell, possibly Lael Brainerd in the future. The need for transparency, the need to support the markets isn't the same or wasn't the same then as it is now, and it'll be interesting to hear what Mohammed has to say.
Matt, this was fun. It's good to see you, buddy. It's nice to make this happen.
Let's do it again.
You got a pen handy?
In Austria.
Write this one down.
Yeah.
Martin Weiss. He's the ambassador of Austria to the United States. Okay.
Call him.
Right.
Send him a bottle of wine.
Futures down 9 on the S&P. We're negative 0.2%. From New York City this morning. Good morning to you all. On radio, on TV. This is Bloomberg.
With the First Word News, I'm Laura Wright. The Food and Drug Administration has expanded the emergency use authorization of 2 COVID booster shots to all adults in the United States. Boosters made by Moderna and Pfizer and BioNTech have received the okay. That makes millions more people eligible for extra protection. There's concern about a potential winter wave of COVID cases. On Capitol Hill, House Republican leader Kevin McCarthy called President Biden's economic agenda the most reckless and irresponsible spending in the history of the U.S. McCarthy's lengthy speech on the floor prevented Democrats from passing the $1.6 trillion legislation last night. They are set to approve the legislation today. The price of oil is headed for a 4th weekly decline. The worsening COVID crisis in Europe has renewed the prospect for lockdowns. Austria has imposed fresh restrictions, and Germany says it can't rule them out. Meanwhile, the oil market has been fixated by the prospect that both the US and China would release crude from their strategic reserves. The European Central Bank President Christine Lagarde says the central bank shouldn't tighten monetary policy too soon despite inflation. In Frankfurt today, Lagarde said she did not anticipate an increase in interest rates this year. Euro area prices are rising at the fastest pace since 2008. Bitcoin has now fallen almost 20% from its record in less than 2 weeks. The largest cryptocurrency is hovering around $57,000. Some analysts say a sharp pullback is normal after prices soared 40% in October. There's also been a crypto crackdown in China and new US tax reporting procedures that have hurt sentiment. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
up front, when your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
What looks like a very interesting and somewhat exotic effort to literally mine new coins in order to trade with them has the potential for undermining currencies, for undermining the role of the dollar as the reserve currency, for destabilizing nations.
That was former U.S. Secretary of State Hillary Clinton throwing some shade on Bitcoin, on crypto assets in general, adding fuel to a number of officials who've come out to say what they think about this asset class. Meanwhile, you are seeing Bitcoin fall nearly 20% from its peak about 2 weeks ago. We are going to get to that. And I'm here with Matt Miller, who is a complete aficionado of all things crypto, and we will get there. But right now, I do want to focus on the other commodity, and that would be oil, which is fallen almost 10% since October 26th. And I do wonder how much what we're seeing in Europe has a sticky story as we look into next year. Mike McGlone covers both because Bitcoin is increasingly considered a commodity. He is Bloomberg Intelligence commodity analyst coming to us from Florida. Mike, what's your sense of how much the oil price has to fall from here, or whether we're just seeing a bit of a wobble before its ongoing ascent?
Hi, Lisa. I think oil's going to $50 a barrel, and that's not very profound at all. That's just the average price since the collapse in 2014. And the cost of production in the U.S. is now $37 a barrel. Back in 2015, it was about $60 a barrel. So oil is doing what it should do. It's responding to elasticity of supply and demand. U.S. is going to be a net return to being a net exporter next year. That's based on most estimates. Demand is not increasing. It's actually starting to trickle down, and supply is taking off. It's just simple rules of economics. And now there's other issues with COVID not going away. So I'm a bear in crude oil. I was too early, but now I look at it this time next year when we're sitting around a Thanksgiving table, crude oil is a guide. We're going to be talking more about deflation than inflation.
That's fascinating, Mike. What do you think? Have we seen the high point for oil in the near term?
Oh, sure. I think it's peaked at 85. Lisa, I've been watching the one-year curve. You look at that contract for DEES 22, it has not been able to get above $72 a barrel. Now it's starting to collapse back down to the cost of production because we've had steep backwardation. Part of that is because producers are selling forward. They're locking in profits at double their cost of production. And so I look at it as, you know, compared to things like Bitcoin, we have no elasticity of supply. Elasticity of supply in crude oil is going to accelerate, and I think we're going to see that trend that was before COVID go right back down, maybe below 50.
So maybe this is what you're saying, Mike. Do we get kind of a self-fulfilling prophecy? If producers also think we're going to $50 a barrel, do they make and sell as much as they can right now?
Well, it's actually, I think that might be a little more complicated, Matt. I think it's that simple. They see profits. And when people say ESG, I'm like, great, on 1 to 10, that might be a 1, but when it comes to commodities, it's supply, elasticity, and demand. That's the 10. They see profits. They're going to find ways to bring on supply. It's just the way it's always worked. It just might not work overnight. And OPEC is making themselves redundant like they did before. They're helping to boost these profits for the shale and the Canadian oil sands. They're like saying, thank you, we'll bring it on.
We saw Bitcoin drop to about 20% below its all-time high. I think it hit about $69,000 a couple of weeks ago, but now we're looking at $57,680. Today it was down even as the rest of the complex was gaining. We saw gains in Ether, Litecoin, Monero, XRP, Zcash, everything that you could think of except for Bitcoin. What's going on here?
Well, Matt, I appreciate you bringing that out early on today because Ethereum is holding really good support around 4,000. That was the old high. So I see Ethereum is creating good technical signals, and it does have fundamental declining supply, increasing demand. Bitcoin, I think, is coming through a hangover. All the excessive speculative leverage longs who bought around the ETF launch are getting flushed out. We're hitting those stops, and just going to go right back to the bull market. And that's a key thing to remember about Bitcoin and Ethereum. They're enduring bull markets that have corrected. Then you look at some of the other ones like Shiba and Inu and stuff, that's just massive speculation that needs to be purged.
Mike, we splumped in with a quote from Hillary Clinton talking about crypto assets, talking about Bitcoin. She's saying that has the potential for undermining the dollar, undermining currencies. What's your response to that?
Well, I really enjoyed listening to that this morning because the facts are exact opposite. The most widely traded cryptos on the planet are digital dollars. People call them stable coins, but 95% are crypto dollars. So tokenization, digitalization, cryptocurrency is enhancing the dominance of the dollar on a global scale. That's part of the reason China's pushing back. So I look at it as, unless those trends reverse, cryptos are great for the U.S., and now they have tax. They push against China. They have votes, and they enhance the value of the dollar. So I look at this as just a matter of time. The U.S. is going to regulate it properly, and Hillary Clinton just needs to leave some of our posts on the terminal, I think.
Beyond regulation, when do we get, what do you call it, CBDC, central bank digital coin from the Federal Reserve, Mike?
It's done. It's already happened, Matt. $130 billion now tracking the dollar in independent tokens. What the Fed's going to do, what the government's going to do is like they did, too. I used to work at a primary dealer when I wore this jacket in the trading pits. They're going to regulate it like they do banks and primary dealers. That's what I see is happening, because why mess up this awesome technology? In crypto dollars, you can transact 24/7, instant settlement, and you earn interest like euro dollars. And it's just like how the euro dollars got started. The Soviet Union.
I'm sorry. I just, I got excited for a second, Mike, because when I saw the story about Amazon trying to throw out Visa credit cards, I thought, why don't they have their own coin? Then we can just buy and sell stuff on Amazon with, Amazon crypto. Is that going to happen? Are we going to start seeing big companies like that make their own crypto?
Well, what's happening with Visa and MasterCard is very unique, Matt. They are gravitating towards stable coins, crypto dollars, because it's a much easier way to transact. Using Bitcoin and cryptos to actually buy things doesn't make sense to me like gold, but that's helping facilitate the dollar, which is now still the world's best way to transact and transmit as a currency. You just don't want to hold it long term because it is kind of melting and you don't get any interest.
Mike McClone, thank you so much for joining us from Miami in your trader jacket with the purple-lined lapel as he remembers his days back in the pit. I love it. I got to say, I am fascinated right now at some of the market moves, Matt, and I know that you are always an expert on Bitcoin. That has been a dramatic move, but also today has been a dramatic move in the two-year yield. Katie Greifeld of Bloomberg News pointing out that it's the biggest drop in two-year yields since March of 2020, and this comes in the heels of what's going on in Germany, in Austria. I do wonder how much Fed policy will be dictated by the ECB or how much divergence can continue.
Yeah, well, we're seeing a lot of asset prices circle back to 2020. We also have the biggest or the highest point in the Bloomberg Dollar Index since 2020, right now at 1178, 1179. The concern is that this pandemic could go back to levels of 2020. Certainly in terms of infections, we have reached those levels and then some. So we're at records in Germany, in Austria, across the core of Europe. But as you point out, Lisa, there's a huge difference between infections now and last year and deaths and hospitalizations between now and last year.
Yeah.
Fortunately, the latter is much lower.
Yeah, and when do we start to see a loosening up in some of the policies, particularly in some Asian nations, as they try to deal with an endemic COVID rather than a pandemic COVID? Coming up on Balance of Power, Dr. Steve Corwin, President and Chief Executive Officer of New York Presbyterian Hospital, on COVID, on getting enough capacity at a time when a lot of health employees have been quitting, with morale definitely deteriorating. The euro, 112.88. This is Bloomberg.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Pulling back from all-time highs from New York City for our audience worldwide. Good morning, good morning. Your equity market down 8 on the S&P. We're negative around about 0.1%. The drama this morning is in Europe. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
From New York, we begin with the big issue, another brick in the wall of worry.
COVID is back as a big risk. COVID could come back with a vengeance.
There are some risks on the inflation front.
Some extraordinary valuations. A lot of concerns around valuations.
Definitely pockets of, greed.
That's uncomfortable for investors.
And then you've just got this wall of liquidity sitting there.
I know everybody's nervous, but
the Fed is your friend.
Monetary policy is still extremely loose.
this is where you make money.
Just look at the equity market.
Risk assets are on fire. They're not justifiable. I mean, they're just not.
This is not 2006. It's not 2007.
The direction looks up from here to the end of the year.
Joining us now, I'm pleased to say, is Mohammed Al-Arian, Bloomberg opinion columnist, Queen's College, Cambridge president. Mohammed, restrictions back in Europe, in Austria, perhaps of compulsory vaccine order being established into next year. This situation in Europe right now, Mohammed, how it's spilling across into the bond market, into treasuries. Your read on things at the moment?
So the news from Austria shook two consensus views. One is no more lockdowns. Two is that you couldn't segregate the population between vaccinated and non-vaccinated. And the market ran with that. And it's fascinating to me to see what the market has done. It is pricing in lower growth with the opening up sectors. Remember those hit particularly hard. Look at European airlines. It is pricing in more dispersion from central banks, noting also Christine Lagarde's very dovish statement today. It is pricing in a stronger dollar. And most surprising for me is that it has brought down U.S. yields by 5 to 6 basis points across the curve, as much as Europe. That's the one that really stands out to me as a market overreaction. And I suspect it has something to do with liquidity.
Mohammed, you don't think it's a read-through on the Fed potentially backing away from evolving the language in the way that some people in this market anticipate?
So, I always think of news either informing, influence, or imposing on someone's decision. When I look at the ECB, it will definitely influence the ECB decision. But when I look at the Fed, it will just inform the Fed, but not have a material impact. So I do not believe that a 5 to 6 basis point move in curves is justified in terms of potential impact on the Fed decision.
You clearly haven't changed your view on the Fed. This is what you said on Twitter recently. It's getting less lonely for those of us urging the Fed to ease more quickly its uber stimulus stance. More people, though far from the majority, are recognizing the need for the Fed to stop dismissing inflation just as transitory, consider more seriously policy adjustments. Are you feeling less lonely, Mohammed, and what's the significance of that?
So I am feeling less lonely because we've been, those of us who have been worried about this for months and have been urging the Fed not to get behind the curve because we worry about the implication of de-anchoring inflation expectations, we're pretty lonely. Now we're finding that camp transitory is getting smaller, that more people are taking inflation with an open mind. We also are finding that more people are calling for the Fed to do something, including within the Fed. We heard James Bullard this week. So yes, it is less lonely. You have economists such as Jason Furman and others that have also moved to that camp. And I think it is to be expected, John. There are significant inflation dynamics in play, and the Fed risks making a policy mistake.
I looked at some of the Jason Furman comments this week, Mohammed. I want to build on some of them with you. Do you think it's ironic, given how much the framework has shifted at the Fed, that arguably over this year, over the course of the year, the Fed has become more forecast dependent and less data dependent? Is that your interpretation too?
I don't know if I would go that far because they're still holding on to the new monetary framework. And as you know, we've discussed this for the last year. I believe that the new monetary framework was appropriate for the world of yesterday, a world of deficient aggregate demand. It is not appropriate for the world of today, a world of deficient aggregate supply. And this week alone, you've had William Boyder, who used to be on the MPC and who used to be the chief economist at Citibank. You had Martin Wolf of the FT come in and say, you know what, this framework is no longer appropriate for the world of today. So I still think they are a little bit too hostage to a framework that made a lot of sense when they started thinking about it, but doesn't make much sense today.
You mentioned Bouter in the FT. Some pretty strong words from William Bouter. The choice of average inflation targeting is economically illiterate. William Bouter going on to say it is time to get rid of this potentially costly nonsense. Mohammed, something a lot of people have picked up on. We've become conditioned by the previous cycle, a cycle where the Fed arguably moved too soon. And we were not conditioned by the cycle before that, a cycle where arguably the Fed moved too late. What do you make of that distinction between the two cycles and what we have been conditioned by and what we haven't been conditioned by?
It is a typical behavioral trap. You know, remember, we were influenced not just by the Fed, but the ECB. The ECB is judged by most people to have hiked too aggressively coming out of the global financial crisis. And we came out of the global financial crisis. It took us a long time to recognize that this wasn't a cyclical shock, but this was a structural and secular shock, the so-called new normal, which then became secular stagnation. So we're still very influenced by that when the paradigm has changed. When you transfer 15 to 16% of GDP to households from the fiscal, which we have, demand is not your problem. There are pockets of demand that are your problem, but demand overall is not your problem. And look at the retail sales number as an illustration. Your problem is supply. And we need to change our framework because the last thing we want, John, is that supply disruptions, labor shortages be amplified by de-anchoring of inflationary expectation. We can manage this. If the Fed moves on a timely basis, we can manage this. But as you've heard me say, the window for doing so is closing.
There's another shift in the psyche that I wonder needs to evolve, Mohammed. You and I caught up with Bill Dudley earlier in the year, the former New York Fed president. It was going into the summer, and he brought up this idea, this concept, that when the Fed moves, because they've committed to being late, they're going to have to move quickly, and they could go much higher than people anticipate. I caught up with him earlier this week, Mohammed. He was talking about 3 to 4% on the Fed funds rate. Could you add your view to that, Mohammed? This disconnect in markets right now, I see a lot of calls, a lot of people still pricing a very shallow Fed funds rate curve through the next several years. Is that a view you share?
I share it, but I share it for a different reason. I think that if you purely looked at what is warranted, you would be where Bill Dudley is. 300, 400, at some point he was at highest 500 basis points. However, neither the economy nor the markets can absorb such a rate hike. So the journey to that rate hike would involve problems that would result in probably a significant slowdown, if not a recession. That's why you want the Fed to move quickly. You don't want the Fed to be forced into raising rates aggressively in a short span of time. That would be very bad for the economy, it would be very bad socially, and it would be very bad institutionally.
We're starting a journey, Mohammed, without really understanding who's going to be the leader of that journey, where the leadership comes from. You understand the race right now, we all do, it's between Chairman Powell and Governor Brainerd. I've been asking through the week, Mohammed, over the last several months for that matter, how much daylight there is between the two, both perception and reality. What's real and what's perceived about the daylight between the two, from your standpoint, Mohammed?
So I think there is daylight. There's daylight on regulatory issues. There's daylight on climate change. There's daylight on openness to talk about decentralized finance. So there is daylight. I think Lael Brainerd embraces these three things more than Chairman Powell. There's less daylight so far, but I want to stress so far, on monetary policy. That's why I'm not a buyer of the view that the market would react very negatively to the appointment of Lael Brainerd as opposed to the reappointment of Powell. I think in both cases, the market reaction will be similar on that. What we don't know, John, is how agile will they be when faced with new facts? And every day the Fed is faced with facts that undermine its thesis, or its mischaracterization is the word I like to use better, of inflation. And that's where the political judgment comes in, and that's a political judgment that President Biden needs to make.
So, Mohammed, are you willing to endorse one over the other right now, as you see things set up going into the weekend, going into next week?
So if you force me into that situation, and I want to stress that they are both incredibly qualified and that both would be appropriate, but if you force me, I would opt for Lael Brainerd. And the reason why I would opt for Lael Brainerd will not surprise you, Jonathan, is because I do believe that an economist heading the Fed at this point, with the expertise and the experience she has and the foundation that she has in economics, would be marginally better. But I do respect that this is a choice that is a very difficult one. I also think that at some point, there's going to be a lot of discussion about who else is appointed.
You understand where I'm about to go next, because you're probably going to receive some pushback to that line. A lot of people would think if there's any daylight between the two, you'd expect Governor Brainerd to be perhaps more dovish than maybe Chairman Powell. I don't endorse that view. That's just the view of a lot of people in this market. You want the Fed to go quicker, yet you'd be endorsing Governor Brainerd. And some people might push back against that. But when I hear you speak, Mohammed, what you're saying here is that the more likely candidate to respond to the incoming data is someone that understands the economics a little bit more. Chairman Powell, the lawyer, is not that man. Is that a fair characterization of your standpoint?
Yes, it is. Because if you've had a fundamental economic training and have that, you're much more open-minded than if you are behaviorally hostage to what you've been saying for a very long time, which is inflation is transitory, there's no need to go quickly, etc.
And Mohammed, before you run, you talked about the package. Just quickly, can you weigh in on that? I'm surprised we haven't talked more about it. Vice Chair Clarida is not even being talked about going into next year, going into this decision. What do you think a package of overall nominees could look like?
I don't know, John. It's interesting that we don't talk about it enough, but potentially you have both vice chairs on you, and then you have one or perhaps two more appointments that need to be made. So this is a significant moment for the Federal Reserve, and we are focusing on the chair, understandably so, but we should also have interest in who else will be appointed.
And the confirmability of all of the above. Mohammed, it's good to catch up. I know you're super busy and you've carved out some time for us this morning. We appreciate it, sir. Mohammed Al-Erin there of Bloomberg Opinion and Queen's College, Cambridge. Your equity market, a little bit negative. Your bond market, there's a really strong bid here. Mohammed touched on it. It's right the way through the curve, 5, 6, 7 basis points. At the front end, down about 6 to 44 basis points. Coming up on the program, it's the main event this morning. It's at the epicenter of the price action. It's restrictions, and they're back in Europe.
COVID is back as a big risk. And it's terrible what you're seeing in Germany in terms of COVID cases. This is not done yet. We're not out of the woods yet as it relates to COVID.
That conversation up next. This is Bloomberg.
Competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has 3 very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We've got cases in Germany, in Austria, that are higher than at any time in this pandemic, higher than before we had vaccines, before we had antivirals, before we even knew much about how this virus was transmitting. You've got a window of time now where these record numbers of cases are going to continue to climb for at least 7 days.
Shaking up global markets, the events in Europe, Austria re-entering a nationwide lockdown, Europe grappling with another COVID surge as Austria becomes the first country in the bloc to mandate vaccines. Out of Brussels, Bloomberg's Maria Tadeo. Good afternoon, Maria.
Yes, and you know, John, you mentioned that this new drastic measures announced by Austria, they're announcing that a national lockdown for 20 days will be implemented. The idea is they want to use this to bring down the infection rate, and after this lockdown is completed, there will be a general vaccine mandate. Getting the vaccine or not is no longer a personal choice. You have to get vaccinated. What is interesting about the Austrian case is that it could also set a precedent for Germany. The two countries have seen the vaccination rate stall. They've seen the infection rate jump. So again, you could see a lot of what you're seeing in Austria happen in Germany. The big caveat here, of course, is that Germany is the biggest economy in the euro area. This is a huge industrial power for the European economy, and this brings big questions about the European narrative, the European recovery going overall in the back end of the year, but also what does the European Central Bank do in December? Remember, until now, Christine Lagarde had always said the pandemic program, the QE special program, would end in March because the pandemic was coming to an end. On the ground, the numbers reflect a very different story.
Maria, let's build on that. PEP, the E and PEP emergency, pandemic emergency purchase program. We're a month away from that meeting, December 16th. Can they really turn around and say the E should no longer remain?
Well, you know, in many ways, if you look at Christine Lagarde on Monday, but also speaking today, she's not clinging on to the March deadline the way she would do before. The conversation is also changing from the inflation picture to the recovery and the threats being put to the recovery. When I spoke to the Vice President of the European Central Bank, Luis de Guindos, also on Tuesday, he said we have to be mindful also of the situation on the ground. Our policy has to reflect the real economy. Well, in the real economy, you could be heading in for a big lockdown in Austria that we're seeing already, but also big restrictions coming in Germany. And this is the biggest economy, the one that sets the tone for Europe overall.
Maria, thank you. Maria Tadeo, the latest out of Brussels. On this front, you can see how this spills over to equity markets in the US. Equity futures on the S&P basically unchanged. On the NASDAQ firmer, on the Russell, the small caps have been struggling, just as people start to think about reaching for the Q1 playbook from 2021 all over again. It's a single name story I want to pick up on, the airlines on both sides of the Atlantic, starting with the US players. United Airlines down by 1.8%. The moves in Europe have been so much bigger. Over the last 10 days, if you get to the European names, we have been down for 10 straight sessions on IAG, the parent company of British Airways. We're down again today. 10 straight sessions lower on Ryanair, down again today by 1.9%, 1.8% lower. There is a struggle for the European equity players, the European airline players rather, and the US airlines too. To weigh in on all of this, Nuveen Sarah Malik and Invesco's George Evans. Sarah, I want to start with you on what we've learned from Europe this morning. This equity market, pretty unshaken by its stateside. Your read of things right now.
Well, what we're seeing is, while the bigger picture has been if the Fed is out of touch with reality, what we're seeing, though, is this rise in cases in Europe and lockdowns is impacting the U.S. We're seeing an uptick in 30 states for COVID cases. And there's a few things we need to think about here. One is Does this cause the Fed to change their taper timeline or how they're thinking about interest rates? We think this wave is likely lower than previous waves, so the Fed stays on plan. But what you're seeing with a market that has been hitting new highs is that the undertones are quite defensive. We're seeing growth stocks outperform because investors are worried that the economic growth is going to get cut off not only by the Fed, but maybe by this fourth wave of COVID. But there is some good news here. We do have a COVID pill, hopefully around the corner. And going into 2022, hopefully this pandemic becomes more of an endemic and we can somewhat kind of move forward with COVID cases becoming more manageable. And then we go back to worrying about the Fed and what are they going to do. Our view is in 2022, it is going to be growth that trumps inflation. We do see some permanence to inflation, but some of this hard data we're seeing makes us optimistic that growth can overcome it.
George, Sarah picked up on a key view of yours, George, to be long growth equities through next year. Why is that, George?
Well, first of all, we do think that in the long term that that inflation will prove to be transitory. So low interest rates, when we get through this sort of wobbly period where there's a lot of conflicting data, that's going to be very, very supportive of the valuations of growth stocks. Certainly, if we look back over the last 10, 15 years, the actual fundamental performance of growth stocks has absolutely supported what were considered high valuations the whole way along. And we think that that sort of general global sort of disruption to many industries and a wave of productivity is going to offer enormous growth opportunities over the next 5 to 10 years.
George, just looking at your underweights, financials, energy, can you help me understand the financials call a little bit more? Financials and energy, the banks and energy stocks have been fantastic performers this year. Why will we struggle through next year?
Well, so long term, I mean, I've been structurally underweight financials since I started this strategy in 1996, and it has served us and our investors extremely well. We appreciate the fact that at a time where when the yield curve is steepening, that this will be very, very good for financials. But essentially, one of the reasons we don't like financials is they all do the same thing. It's a commodity. Any time that anyone does something really special, somebody else is competing with them in exactly the same way in very, very short order. So unless you're able to differentiate yourself on a structural basis, it's very, very difficult to think that you're going to have significantly, high and sustainable returns on capital employed that differentiate you from competition.
Sarah Malik, can I get your response to that, please?
Well, we actually have a different view on energy. We see an elongated cycle here for two key reasons. Producer discipline, so supply should remain tight, and global demand driven by non-U.S. markets and also eventually an acceleration in jet fuel. If you look at some of these companies like Pioneer Natural Resources, they're being very disciplined when it comes to volume growth, capping it at 5%. These companies are now returning more cash to shareholders. Pioneer has a 12% free cash flow yield, returning 75% of its cash to shareholders. We're seeing this across the board with energy companies. We see the new floor with oil prices being more in the $60 range, and they could peak out at about $100, not sustainably. So we think this elongated cycle could last because of the tightness of supply of oil around the world.
WTI at 77.50 this morning, negative 1.91%. Sarah Malik, George Evans, sticking with us. Coming up, the morning calls, plus happening right now, the House voting on President Biden's economic agenda. The latest developments down in D.C. coming up shortly. From New York, this is Bloomberg.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors, that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
This is how we started this morning. In Europe, a bit of risk aversion off the back of what was happening with restrictions in the likes of Austria and maybe Germany to follow. Knee-jerk move lower in the equity market on the S&P, now unchanged on the day. Knee-jerk move lower on the small caps, well off session lows, down by more than 1%, now negative just 0.6%. Similar story in the bond market. Switch on the board and get to treasuries, 2s, 10s and 30s. Let's take 10s. Yields were lower by 5, 6, 7 basis points. Right now, we're coming back to just lower by 5 to 153.94. One to keep an eye on going into the opening bell. Let's get you some morning calls, shall we? And begin first up with BMO, naming Pfizer a top pick with a $60 price target. The analyst expecting the company to continue playing a crucial role in the pandemic's recovery. That stock is up a little more than 1%. Your second call from Wedbush, raising its Tesla price target to $1,400. Matching a street high on Wall Street, analyst Dan Ives expecting the automaker to lead the way in the $5 trillion EV market. That stock is up by about 0.6%. And finally, MKM Partners upgrading Walmart to a buy, 166 price target, expecting a strong holiday season with consumers facing rising food and energy prices. We're up there, 0.5%. That is a key pick of Sarah Malik. I'll build on that in just a moment. Coming up shortly, the House voting on President Biden's spending bill. The latest from D.C. Coming up next from New York, this is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
So the day begins with some jitters in Europe. It spills into the bond market in Germany. That spills into the Treasury market in the US. And equities are down just a little bit on the S&P. We're down not even 0.1%. The pain is in the small caps. The Russell is down about 0.75%. The Nasdaq is firmer at 0.4%. It's all-time highs to kick off Friday morning. Good morning to you all. There is the opening bell. Switch up the board and get to the bond market. Your 10-year Treasury yield all over the place this morning, down 5 basis points to 153.77. In the FX market, dollar strength, euro weakness, euro dollar a break of 113 to the downside a little bit earlier, then back through 113 at 113.13, negative 0.5%. For crude, we're down 1.5%. It's been a rough, tough ride for crude over the last few weeks at $77.79. Around the opening bow, we're positive about 0.1% on the S&P 500. Top of the pile, information technology advancing 0.4%. Bottom of the pile, you might expect this given what's happening with treasuries. Financials down 0.7%. Energy down by 0.9%. With us is Sarah Malik and George Evans looking ahead to next year. Sarah, I've seen some big calls from the likes of UBS looking for 5K on the S&P by the middle of next year. I've seen a low call from Morgan Stanley, 4,400 by year end next year. At the index level story, Sarah, away from the single name homework that you spend so much time on, what are your general expectations?
General expectations is that economic growth is really going to be what wins next year, and that does push earnings up about high single digits. If you look at the data this week, retail sales, industrial production, what that told us was that the weaker, softer economic data was related to the Delta air pocket. So as long as that hard economic data can remain strong, it can handle the Fed starting to raise rates in a more moderate manner. Just because the Fed raises rates does not mean that the cycle ends. If they're raising rates because economic growth is strong, that will be fine for the equity markets. That's our view going forward. Obviously, there's greater risks around this now that we have COVID and also other inflationary issues. For us, what we're watching in terms of inflation is it driven by wage pressure or by the reopening? We're starting to see some of the shift of spending from goods to services. That should take some of the edge off inflation. But if we do see a strong, sustainable pickup in wage inflation, that would be an issue for the Fed, and they may have to raise rates faster than they're expecting to.
Sarah, one line we hear a lot is don't bet against the U.S. consumer. Looking at the retailers this year, great year for Home Depot, fantastic year for Target. There's a name that you like, and it hasn't been a great year. It's Walmart. Why do you like Walmart so much compared to those other names?
Well, speaking of inflation, supply chains, these companies, Walmart, Target, Cisco, big companies were hit where it hurts this week in terms of inflation and supply chain issues. But for Walmart, we think it's short-term pain for long-term gain. What they're doing is not raising prices aggressively to the consumer. Not only is this a social good, but it's good for Walmart. You're seeing them gain market share in grocery. Their transactions are up. Their foot traffic is up. I think this will pay off for them in the long term. It also should pay off for Target. Now, Cisco is another story where record bookings, strong order growth, but they're having a hard time forecasting their business. We were disappointed to see how hard they were hit in terms of margins compared to their smaller peers that actually handled the environment much better. George Evans, can you add to that, just the first part, how to play the U.S. consumer, how to invest around it at the moment?
Well, I think I run an international strategy, so it's anywhere but the U.S. One of the things that we've, in international, I think it's really important that you've got to be a stock picker. It's much more about finding the individual global winners than it is finding the predicting the overall market. One of the areas that we've been overweight for a long time has been in luxury goods. So we own a lot of Louis Vuitton, we own a lot of Hermes, and these have been doing incredibly well globally. They've been doing well in China, but they've been doing staggeringly well in the US. And it's not just people coming to the big cities, coming to New York, going to Chicago, San Francisco, whatever. the demand has been spreading out into sort of, very sort of in a very ubiquitous manner across the states. So people are sort of feeling sort of really good coming out of the lockdown. They've got spending power, and that's certainly one way to play the US consumer.
4 minutes into the session, your equity market down 7. We're negative about 0.1%. Just to update you on the early moves, the Russell, the small caps, down 0.6%. The Nasdaq just churning out record highs, up another 0.2%. Down in Washington, D.C., happening right now, the House voting on the president's $2 trillion spending bill, roughly $2 trillion effort, getting closer and closer, Michael McKee, to that 218-vote line in the sand Speaker Pelosi would like to get to.
Yeah, I'm a big fan of your show, of course, but I've got one eye on C-SPAN right now, and the vote is 204 for the bill, and so they are still short by 16 votes, but 16 Democrats haven't voted. Looks like it is on track to pass. Godot won't have arrived, but he will at least have been spotted. Has to go to the Senate next. And we thought this might be a good time to remind everybody what's in this bill. We've been talking about Build Back Better for months and months and months. It is a lot of social programs. They separated out the infrastructure stuff. Universal pre-K funding for child care and health care, paid family leave, and they're going to allow Medicare to negotiate drug prices, hopefully to bring them down. A lot on climate, including a fee on methane, tax credits for renewables and electric vehicles, things like that. And then on the tax side, they're going to increase the SALT cap, important to people who live in New York and San Francisco, impose a 15% minimum corporate tax, which has kind of been in train anyway, and then a 5% surtax on $10 million incomes. There's also one for people who have $25 million incomes. As I mentioned, this goes to the Senate next, and here are the two most important people. We've been talking about them for quite some time, Joe Manchin and Kyrsten Sinema. Neither one is a big fan of parts of this bill. Manchin thinks it spends too much on the social programs, and she thinks it taxes too much. So we'll have to see what changes it undergoes. There is an immigration provision that would help the dreamers, those who would otherwise be deported, who've been in the country since they were little children. Wasn't their fault they're here. And that's in the House bill, but it may not make it into the Senate bill. So there's still a long way to go for this, and I'm not sure we're going to get to it by Thanksgiving. But heck, if we can wait for the Fed to Thanksgiving, we can wait for this. Right now, looking at the vote, and it's still not quite there, John. We're going to be within minutes of getting this done.
Mike McKee, thank you. You can follow this on Live Go on a Bloomberg terminal. You can leave me by all means, but go to Live Go on the Bloomberg terminal if you want to do that. Joining us from Washington, D.C. on the process, Anne-Marie Hordern, AMH down in D.C. Anne-Marie, good morning to you.
Good morning, John. And as Mike says, this is not likely going to happen before Thanksgiving because lawmakers are out of town after this. They're on recess for Thanksgiving. But Senator Schumer said potentially before Christmas. But as Mike says, once they clear this hurdle and they get to 218, I think right now the number count is just above 207. Then, Jonathan, in the Senate, this is going to be much more difficult. There is no guarantee that this is going to pass the muster of 50 Democrats. And it's not just Senator Sinema and Senator Manchin. Any senator that is a Democrat that caucuses with the Democrats, they need every single one of them. So any issue any single one of them has could potentially block this vote. So it's going to be incredibly challenging for the president, especially the fact that there's less than 2 weeks technically of working days for these senators. There's going to be potentially a lot of weekends and late nights happening on Capitol Hill if they think they're getting this done before Christmas.
Anne-Marie, we talk a lot about size. Let's spend some more time on substance. What's the one item, if there's several in this bill, that you think stand out as issues that will be really tremendously difficult to resolve over the next few weeks in the Senate?
Well, there's a lot, but two I would point to is going to be taxes, especially when it comes to salt. So one of the policies and the provisions in the House bill is raising that salt cap to $80,000 from $10,000 under the Trump 2017 tax cuts. But when you go to the Senate, many individuals are saying this potentially is going to look like an easy way for the wealthy to actually get more money back. And that is something that the Democrats especially do not want going to the midterm elections, and something they certainly did not campaign on. So potentially you could see a cap for those that make specific amount of money. We don't know what that is. Maybe it'll be $400,000, $500,000, but that is something that's being discussed. Also, paid family leave. This is something that Senator Manchin has had issues with. Potentially that gets a little bit, gets a provision in the Senate. And then one other thing, Jonathan, I think is really under the radar, but when you look at the electric vehicle tax credits, there is an extra tax credit if you buy an EV from, say, GM, because they have unionized labor workers.
Yep.
Senator Manchin recently was at the Toyota factory saying he does not agree with that. Why should those who buy a GM not get it? He thinks it's very unfair that they are prioritizing these types of companies. Potentially that's going to be another big fight over in the Senate.
Elon Musk not impressed by that one either. Anne-Marie,
Certainly
before you
not.
go, just a procedural issue that I just want to bring to the attention of our audience at least. The president undergoing a colonoscopy a little bit later, according to the press secretary, Jen Psaki. Of course, there's a procedural issue that takes place here. The presidential power to go to the vice president. Anne-Marie, just weigh on that quickly.
Yeah, so this is just certainly procedural. He's getting a colonoscopy. Because of this, he's under anesthesia. And because of that, he has to transfer power to the vice president. This is routine in terms of his checkup at Walter Reed, but because he will be under anesthesia, this is just procedurally, Jonathan, what has to be done. And this would be done under any president. But we also should note that it's an interesting time for the president to be getting his physical because tomorrow he celebrates his 79th birthday.
And then we're waiting to get that announcement on the Fed chair too. Of course, enjoy the birthday
can't go
first by all
without
means.
saying that.
Of course I can't. Anne-Marie, we're going to talk about it in about 5 minutes. Don't go anywhere. Thank you. Caught up with Jim O'Sullivan of TD Securities on the momentum in this economy and the fiscal issue too. Take a listen.
Despite the budget bill being worked on in Congress and will probably ultimately be enacted, that there will be significant fiscal drag in 2022. So the budget deficit will go from basically around 12% of GDP in fiscal 2021 to around 5% in fiscal 2022. Now, there are some offsets, but we think the net of this is going to be pretty significant downward momentum.
Just a final word from both of you, Sarah Malik, George Evans, and thank you for your patience. Just a final word on this. As the US House, we understand, has the votes to pass this tax and spending plan. It goes to the Senate. It will be around for a while, a number of weeks before we can pass that effort, if we can actually pass that effort. George, the fiscal drag here, how substantial do you think it will be as we pass a bill this large in the House and maybe it passes the Senate in the next several weeks?
Well, I think it's fair to say that we're probably at sort of at fiscal peak right now, I think it's going to be quite a significant sort of percentage of GDP, but that's going to feed into sort of the lowering of inflation expectations, sort of on a sort of year out basis and beyond.
Sarah, can I get a final word on that from you, please?
Monetary fiscal policy is moving from expansionary to contractionary. That will be a headwind for the markets. General view on this package is medium term. We think it's a positive for the markets. It's not an immediate positive, but the other good news for the markets is lower taxes than were originally expected. That's good for earnings growth next year. That's what we're relying on to drive the markets next year because we don't see valuation expansion as a main driver for equities in 2022.
Sarah Malik, thank you. It's good to catch up alongside George Evans on this market. Thank you very much. Coming up on this program, markets keeping a close watch on DC, waiting for developments on the Fed chair and a whole lot more.
The key piece of information that we're waiting for is who will be the Fed chair going into next year.
The countdown to the next Fed chair is up next.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I've spoken with Xi about Taiwan. We agree we'll abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
If you force me, I would opt for Lael Brainerd. If you've had a fundamental economic training and have that, you're much more open-minded than if you are behaviorally hostage to what you've been saying for a very long time, which is inflation is transitory, there's no need to go quickly.
Powell versus Brainerd. It's the president's pick, with Wall Street itching for an answer. The press secretary, Jen Psaki, saying to expect an update before the holiday.
I think you can certainly expect the nominee for that he will make a decision and will have more to say before Thanksgiving on the chair.
So we wait, and the debate heats up on Capitol Hill with two Senate Democrats, the latest to weigh in, urging Biden not to renominate Chair Powell. For more, let's get to AMH again. Morning, Anne-Marie.
Good morning, John. Yeah, we have these two senators on the heels as well of what we know and where she stands, Senator Elizabeth Warren. So that really brings the total to three who do not want to see a reappointment of Fed Chair Jay Powell. So this likely will take the progressives definitely leaning towards a potential, leaning towards what their pick would be Governor Brainerd. What is interesting, Jonathan, is that climate is now really becoming out front and in focus. And I want to bring to you why they are have this bit of an urgency to want to push ahead on climate, and they don't agree with Chair Powell has said. Earlier this month in November, he has said that when he was asked about if the Fed should take more of a stance on climate, make sure that banks are not loaning to coals or fossil fuel companies, he says that's not a decision for bank regulators or any agencies. That is for you. That is for Congress. That is for elected representatives. While the tea leaves, potentially, if you read through some of Governor Brainerd's speeches, it's really about her leaning into these multilateral institutions and potentially maybe wanting to have a little bit more of an openness to take more of a stance from the Fed when it comes to climate change. And this is where we're seeing a lot of tension right now in this heated race right now about the Fed chair.
You've done some great reporting on this, and Anne-Marie, ultimately what this will come down to is confirmability. We've talked a lot about the president potentially perhaps dragging his feet on the decision. Ultimately, though, the decision's almost out of his hands to some degree, because we still haven't found out from key senators which way they would lean. Senator Manchin being one of them. I understand from your reporting, Anne-Marie, that he's going to be interviewing Governor Brainerd potentially. Interviewing, I say, talking with Governor Brainerd before the weekend.
Yeah, it does sound like it is an interview. So he had a phone call with Fed Chair Jay Powell. Obviously, he probably brought up that August 5th letter he wrote to the Fed Chair when he said you shouldn't be over-prescribing a patient, talking about the patient, the U.S. economy. And now people familiar with his thinking are saying that he will have a meeting, and his team is working on a meeting to also meet with Governor Brainerd, as well as another meeting with Fed Chair Powell. So with Senator Manchin really in the mix now, it does seem to see that the White House is trying to shore up which way, as you say, these key senators are going to want to vote.
Anne-Marie, just moments ago, the tax and spending plan passing the House, heading to the Senate, largely expected. Now we wait. And it's a question of how long we're going to have to wait.
Well, Senator Schumer wants this done before Christmas. The timeline is incredibly difficult. And Jonathan, this is really the cornerstone of Biden's economic agenda. So he's very much so focused on this, potentially why you are seeing things potentially drag or slip, like the renomination or new appointment of a Fed chair. But Jonathan, this is just one issue on the to-do list. They have a China Competitive Act they're trying to get through. They have the potential X-date being December 15th for the debt ceiling. They have a stopgap funding measure they have to pass. They have a defense bill they have to pass. all of this before the end of the year. And there's less than 2 weeks, technically, of working days. So they're obviously going to be having to spend some of their recess actually on the Capitol because it's a litany of issues they have to get done before the end of the year.
I've got the smallest violin for politicians doing more work. You know that. And I'm not even playing it. Anne-Marie, thank you.
Well, what about me? This means I'm going to have to be here.
You want us to play a violin for you? Is that what you're asking for? I'll play that for you. AMH down in DC, Anne-Marie, our Washington correspondent, thank you. Let's get your equity market dead flat on the S&P 500. A little bit more interesting beneath the surface. We'll do that now with our stocks editor, Dave Wilson. Hey, Dave.
Hey, John. Yeah, fairly even split among the 11 main industry groups in the S&P 500. But if you're looking for movement, you got to look in the groups that are lower. Energy stocks down as concern about the latest COVID outbreak, raises issues about demand. With financial stocks, you've got lower treasury yields weighing on the banks and the insurers. And in the industrial category, that's where you find the airlines and travel stocks are taking a hit in response to what's happening on the COVID front. And I want to focus in on specialty retailers as well, because, we've seen earnings reports since late yesterday from the athletic wear seller Foot Locker, the off-price chain Ross Stores, the cookware seller Williams-Sonoma. All those results disappointing. And this is a group that has done relatively well this year. It's been one of the best performers in the S&P 1500 composite, which spans the S&P 500 and engages of smaller companies. In fact, set a record just yesterday. And now you're seeing the group back off a bit as a result of these disappointments. And while you're at it, you can throw in Farfetch, an online seller. It's down 14% after its results.
Hey, Dave, you mentioned the airlines. Can those guys get a break? Those names. We just reopened travel between New York and the rest of the world, between the United States and everywhere else, and this happens.
Yeah, absolutely. I mean, that's the issue. It's very much sort of a shifting landscape when it comes to COVID cases, and presumably you have concern that these travel-related changes or maybe roll back as well. I mean, when you talk about lockdowns in European countries, you can understand why the concern is there, and it's showing up in the travel stocks and airlines in particular.
And not pretty. Down for a fourth day for the S&P 500 airlines. Dave, thank you. In the bond market, that bid sticks. Down 5 basis points on 10s to 153. On 2s, down about 5 basis points to 0.456%. I don't mean to be too hard on the politicians. I just believe that if you've got time to write books, you've also got time to do a little bit more work, maybe. Just my view, for whatever that's worth. Coming up, the market moving events, your trading diary just around the corner from New York City. As we go towards the weekend with some concerns in Europe, a bit into the bond market, and waiting to find out who the next chair of the Federal Reserve will be, if indeed it's not the current chair of the Federal Reserve. From New York, this is Bloomberg.
Talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation. And we believe that the Q3 was the quarter that was most affected.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
After all the drama over in Europe on the S&P 500, totally unchanged on the Russell, the small caps down 0.4%. The Nasdaq adding some weight to some all-time highs on the Nasdaq, advancing about 0.5%. An equity market at a record high. Into the bond market, a rally in the Treasury market. 2s, 10s and 30s. 2s right now down 4 basis points. South of 50, in at around 46 basis points. And I keep saying it, setting us up for a fascinating month of December, the middle of the month, when we get a Fed decision and the ECB and the Bank of England the day after. The ECB could commit some flexibility into its bond buying program through next year. At the same time, the Bank of England maybe not hiking interest rates. And the Federal Reserve, well, let's just wait for the forecast from the Federal Reserve. And if it's not Chairman Powell, it's Governor Brainerd. Just imagine what that news conference sounds like in the middle of December when we get those forecasts and Chairman Powell has to run the presser. Just something to think about. That's the price action. Here's your trading diary. We start a little bit later with House Speaker Nancy Pelosi holding a news conference at the top of the hour. Another busy day of Fed speak with Governor Waller kicking things off at 10:45 Eastern. Then it's a big one for me. Haven't heard from him for a while. It's Vice Chairman Richard Clarida at 12:15. US GDP plus personal income and spending numbers next Wednesday. And finally, all eyes on the White House with a Fed chair decision in the pipeline. Markets closing on Thursday for Thanksgiving, and I'm told we should get a decision before Thanksgiving. A little bit later, I'll be catching up with Priya Misra, Zach Griffiths, and Gene Tanuzzo on Bloomberg Real Yield. If you can't join me later, have a fantastic weekend. I'll be away next week. I'll see you soon. This was the Countdown to the Open. Thank you for choosing Bloomberg TV. This is Bloomberg.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family. Muy bien, todo muy bien. The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet. So we need a refill of this medication. After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand